real estate agents, September the 15th will be here soon, and if you make estimated tax payments, now is the time to take a closer look at your numbers, especially if summer was busy. Summer may have been a strong season for your business with more closings, bigger commissions, or a welcome pickup after a slow start to the year. More income is great, but your tax payments need to keep up with what you're actually earning. Waiting until September the 14th to look at everything could leave you trying to figure out how much you owe and how you're going to cover the payment at the last minute. So before September the 15th estimated tax deadline gets any closer, I want you to check these 7 areas. Number 1, look at how much income you actually earned so far this year. Start with your commission income. Go back through your records and make sure every payment you received has been recorded correctly. You want to work from the money you actually received, not what you expected to earn at the beginning of the year. Real estate income can change quickly. You could have several closings in one month and very little income the next. Summer may also have brought in more business than you originally planned for. Your current numbers give you a much better picture of where you stand heading into the September deadline. Number 2, tax payments you've already made. Don't assume you remember what you paid in April or June. Pull up your records and confirm it. Look at how much you've already paid toward your 2026 taxes and compare those payments with how your income has changed throughout the year. You may have based your payments on last year's income or started the year expecting your earnings to stay around the same amount. Now you've had several strong months. Your estimated payments should be reviewed when your financial picture changes. Number three, make sure you're tracking your business expenses. You probably spend money throughout the year to keep your real estate business moving. Think about marketing, photography, signs, lock boxes, professional dues, software, continuing education, office expenses, and other costs connected to running your business. Small purchases are easy to forget, especially when you're moving from showing to showing, answering clients, working on contracts, and trying to get deals to the closing table. Go through your business accounts and receipts and make sure your expenses are actually being recorded. Good records help you see what your business is costing you to operate, and they also give your tax professional better information to work with. Number 4, take a look at your mileage records. Real estate agents spend a lot of time in the car. You may drive to showings, inspections, closings, listing appointment meetings, continuing education, and other business-related stops. Trying to recreate months of driving at tax time gets difficult very quickly. Look at whatever system you're using to track business mileage and see whether your records are current. Did you stop tracking somewhere around March? Are the business trips you forgot to record? Now a much easier time to clean up your mileage records than several months from now when you're trying to remember where you drove or on a random Tuesday in April. Number 5, check for business purchases sitting on your personal accounts. You may have paid a photographer with your personal credit card, picked up signs while running personal errands, or had a business subscription coming out of your personal checking account each month. Those expenses are easier to overlook when your business and personal spending are mixed together. Review your accounts and identify business purchases you haven't recorded yet. Moving forward, keeping business spending separate also makes your bookkeeping much easier to manage. Number 6, look at how much money you currently have set aside for taxes. Knowing what you could owe is one part of the picture. Having the money available to make the payment is another. Take a look at what you've been setting aside for your commission checks. Does the amount still make sense based on what you've earned? A strong month could have meant spending more of the commission than planned, while unexpected business expenses or inconsistent tax savings left less money set aside than you expected. Finding a gap now gives you more time to address it before September 15th. Number 7, ask whether your tax plan still matches your year. A lot can change between January and August. Your income can go up, your expenses can change, your business can have a completely different year from what you expected when January started. You don't head into the September estimated tax deadline using old numbers simply because those are the numbers you already have. Take another look at your year as it stands right now. For some real estate agents, everything may still be on track. For others, a review could uncover missing income, expenses that haven't been recorded, estimated payments that need attention, or money that still needs to be set aside. You want to know which situation you're in before September 15th arrives. I'm Kim Clenny, a licensed CPA in Montgomery, Alabama. My free 30-minute business tax and bookkeeping review gives us a chance to look at what's happening in your business before the deadline. We'll review your income, your bookkeeping, and the estimated tax payments you've already made so you have a better understanding of where you stand. September 15th is getting closer. Schedule your free business tax and bookkeeping review now and get your numbers reviewed before your next estimated payment is due.